All right, well, congrats to everyone. We had a big day again today. Made most of my money last night because bond markets and euro dollar futures as well as gold moved mostly last night. And I was up pretty late trading, but I hope you guys did well today. Just want to go through. Here's the big takeaway. So, it's just sad to see that here I'm just listening to some of the typical old wall and some of these pundits going around, just just want to anchor on the news of the day, but quite honestly, when they start to say this is a new structural shift in these trade war negotiations, the structural issue is in the overall global, you know, cycle in the economy. No one's talking about the cycle today, which has been slowing since September and October, and all of this is just it's just catalyst. What is it going to be? What's the last grain of sand that's going to make this whole thing crumble? What's going to be the straw that breaks the back? Looking around the world, the data looks horrible. There's no green shoots anywhere. The only thing that was good about today was that the dollar came off, and stocks still absolutely got crushed. So we've been talking for a while that the equity market seemed like it was completely sticking out or mispricing or just completely oblivious to the global risk here. And you can blame Trump tweet and then you can blame this China move, but the bond markets had this right for the entire move, and this is not a one-off event. This is part of the cycle, and so we want to stay with the stuff that's working. I've just been adding to these euro dollars. I think you're going to make a new high. I'm just going to keep adding to it. I want to see us go to 99, and then we'll figure out from there. I keep talking about this as pi on. So this is basically a play on the Fed lowering rates. I think we're going to go back to pi here, guys, in the weekly. All right, long bonds. I came out of all my 30s last night. So if you were in the live room today, I don't have anything else to do there. Obviously, they kept going higher, but that's fine. Still long tens, and this is why you don't want to sell out of your entire position because you're going to lose your core position. So you want to just keep riding this. Long tens, long twos, long euro dollar futures. I did book just one lot in twos just because. Gold, all the same stuff that's been working, regardless of any tweets, regardless of having to figure out what China's going to do. You just position for the cycle and you're continuing to do well. We covered semiconductors today. I think that was probably one of our best calls of July. So we cycled all the way back to pi. Great job for those of you that went short there with me. That, and in addition to, I said financials, short financials was our other best idea, down 3.3% today. I think it was the worst. Either that or the semis or, tech was the worst sectors today. I did not buy anything other than I nibbled on Amazon. It was really small just because I don't really have that much exposure to anything. I bought puts on all the longer term stuff like Apple, some smaller names that I have. And Amazon's got this trend line. It kind of held in. I'm not really crazy about buying equities here. I want the chance to actually short on a bounce. I would rather have that happen. I'd rather see us bounce and I can sell into it. But if we continue in a straight line, guys, at 25,000 here on the Dow, we got our pi cycle. Well, shit, we're already there. So that's just nasty. We talked about this morning that if you weren't short futures, there was a play to, we did this. When we started breaking the bands here in the model, usually this is where I said this is where the crashes happen between the bands and the 200 and pi. I've just looked at it over and over and over again, back testing history and just trading markets. This is what happens. And then the big market crashes that get all the headlines, throughout history tend to happen when that same phenomena, or you break those same spots, the reversals, and the trend on the weeklies, which is down here. So we haven't gotten there, but nonetheless, that was exactly what we said was possible. I said we could get to pi or the 200 today. We got pretty darn close. So what we did in S&P was actually buy 2,800 puts in a 4-to-1 ratio, and we sold the at the money at the time. I think it was 2,880. So that was a profitable trade. Some of you took that, which was good. And the only thing that what was against us today is still very much an up day. I guess it would have been more profitable, except the euro really backed up on us. So we've been kind of fading this here at pi. I did lighten up. I took off some of my futures because it was heavier than I needed, and it was still pretty good up on the day. So no need to just, it's okay to take some risk off. And so I'm a little bit. This is the toughest part for me to figure out here. I mean, I think it's really, Central Bank of Japan, PBOC. They think they can handle a move like this, and it's one thing to think you've got all the mechanisms in place when you break a big level. It's another thing to let the free market kind of unwind, and if there's capital that wants to try to move out of the country or change its exposure, that may be tougher for them to handle than they think they got. That they think that they can do. So we need to keep an eye on that. I mean, I'm a little surprised the dollar came off as much as it did. So we're obviously the market's really putting the pressure on the Fed to go, which is why you want to be the long gold on the other side of your long dollars, and why you want to be, being long those euro dollar futures is a great trade. Because if the Fed's going to go, then that stuff's going to all do well. So good job, global macro positioning on that. And then from here, I think the top of the intermediate term risk range is closer to 113. So I bought some upside calls just to hedge a couple of these futures positions. And my thinking is if we continue to trade higher, I'm going to come out of those calls, and then I'll use the call profit to kind of feed into some more futures short. And I still want to be dollar bullish. I'm not entirely sure that this doesn't come reversing back down. I'm a little surprised, like I said, that the dollar wasn't a little bit stronger than it was today on this move. So that's that. I mean, just a day really of taking profits. I don't think you need to be in a hurry to buy anything here. We came out of our VIX long calls. We were signaling that down at a 12 handle a couple weeks ago. So you buy that stuff, guys, out 2 and 3, 4 months for days like today. All right. And then we came out of a lot of our equity longs. I mean, I'm really proud of how we came out of our equity longs. We sold out around the highs, specifically S&Ps. That was how I was playing it. So these green arrows. Here, and then all these sales up here. I mean, 29.95, 30.25. And then this is where we went net short for the first time in months. We went net short right before the Trump tweet on the underside of this 3,000. We ran the stops through